Hello traders, this is a Bitcoin technical analysis video. The subject of this video is this a bull trap? The reason I'm doing a video about it is because I see a lot of big accounts on TradingView and on Twitter calling Bitcoin's latest price action a bull trap, and I think that they are mistaken. However, if we are intellectually honest, we have to give credence to the opposing view, and it is my obligation to you to at least present the bearish arguments, and of course that I will have very good rebuttals to these arguments, but I have to be honest with you and to present to you all the evidence. Also, it is unavoidable for me to mention one or two names. I want you to know that I do this with the utmost respect. Almost everyone is better than me. Almost everyone knows more than me. I'm not here to belittle or to denigrate anyone, but I have to mention at least one account, and of course that I will put links in the description box, and you can open these links and see for yourself and come to your own conclusions. If you are busy, the short answer is no, and you can go about your day. If you have a few minutes, please stick around, and of course that there are timestamps in the video for your convenience. The Twitter post that I saw today was as follows. If this plays out, then this man needs a medal. This is a bearish outlook on Bitcoin and would indicate that this is nothing short of a bull trap in the crypto markets. What is concerning about this move up is the declining volume. Please follow this dude. The gentleman that I deleted his name out of respect is concerned about the volume, and he forwards another analyst's opinion that what we have here is a Wyckoff distribution event. Let me explain what a Wyckoff distribution event is. A Wyckoff distribution range is a sideways price movement which manages to stop an upward movement during the distribution phase. Well-informed professional traders execute sales, meaning they take short positions, due to their interest in seeing the price fall. The distribution phase is concluded with the upthrust, i.e. false breakout followed by a downtrend. What this gentleman thinks is that Bitcoin's price action since March of 23 until today, we're almost at November, is a distribution phase. According to this gentleman, the original buying climax was on April when we reached $31,000, excuse me. He doesn't specify an automatic return. He considers the move to the range low on June as a sign of weakness. The following attempts to break above the range high during the month of June and July, were an upthrust according to his opinion. What followed next was a secondary test or another sign of weakness, and this move up is the upthrust after distribution. What is the point of the upthrust after distribution? The point of the upthrust after distribution is to shake out the weak hands, meaning to take out the stop losses of all the traders that were already taking short positions. According to this gentleman, what follows next is a markdown phase, meaning that Bitcoin will get below the range high and continue on a downwards trajectory to, according to him, to around 19K. My opinion is that his arguments do not hold water at all, for a few reasons. First reason is that distribution events usually are taking a very short time, because the market maker, when he initiates a distribution event, he needs to do it fast. Because if momentum to the upside will increase, price will take a life of its own and he will lose control over the market. Second issue that I have with his opinion is that he is assuming that the traders that took short positions at the range high during the months of June and July are still holding their positions, and this is why an uptrust after distribution is needed to shake out their weak hands, to take out their stop losses. Now, this is not a theory class, okay? Here we are all trading the markets. And if you are trading the markets, there is no way in hell, that you will take a short position in July, okay? That you will be in profit by September, and that you will still hold your short position after it has gone completely against you, okay? So let's assume that you took a short position in July and you didn't take profit on September. Then is it serious to think that you will not lose your position already when your position is clearly going against you? I'm sorry, these things may work in theory classes, but they don't work in real life. And in real life, most traders don't hold positions for months, because you pay money for your position, you pay funding fees for your position, and you don't leave a profitable position to go to hell, and you don't fall asleep for 2 or 3 months on your position. These things don't work in real life. No way. Okay? Now, if then this gentleman is right, against all odds in my opinion, then if Bitcoin will go below the previous range high, meaning below 31K, and if Bitcoin will test it as resistance and will see continuation down, okay, we are all big boys. We traded the markets, we've seen uptrends and downtrends. It's not rocket science, okay? If we will see Bitcoin at resistance at 31, then we will take a short position. It's simple. It's simple, and it is so simple that I don't believe that the market maker needs such an elaborate ruse to increase Bitcoin's price by $3,000, okay? 12%, just as a shakeout and just as a bull trap. If this is a bull trap, this is the best bull trap in the world, because I am in profit. I am in profit from this bull trap, okay? So, excuse me, and with respect to the other gentleman's opinion, I simply don't think it is credible, okay? Also, if you are still not at ease, I refer you to a previous video that I made that was at the initial stages of this uptrend, and I examined all the aspects of this uptrend to check if it's real or not. And currently we had a change of character and the break of structure, which is a continuation, check. We are making higher highs and higher lows, check. We are above all the EMAs, check. The RSI is elevated, check, even too elevated. The volume could be higher, but we are at an initial stage of of an uptrend, so I think it's okay. We have support and we broke above resistance. With all the respect, what I think that this gentleman did was confuse a reaccumulation phase with a redistribution phase. An accumulation phase is done when the market is at the bottom before moving price higher. A distribution is done when the market is at the top before moving price lower. I don't think that anyone can deny that we are maybe not at the very top, but we are surely before a breakout, and this is exactly the time for reaccumulation, for building positions before taking price higher. This schematic fits perfectly with accumulation and with distribution, and many analysts, including me, got confused here, but I think that this is an accumulation phase before a mark up and not a distribution phase before the mark down. Excuse me for taking so much out of your time, but my intentions are good and I hope it helped you as well, and I will see you in the next video.